What's up, guys? Eric here, Mr. Fired Up Wealth. Hope you're doing great. I wanted to bring you an exciting video today, talk to you about a stock that I'm really excited about. Just had a good conversation in the Fired Up Wealth group, talked to a couple of my friends on the phone. I've done some research on this one. It's about, I bought this stock last year in December for about $109 a share. It's currently trading around $132 a share. It pays almost a 5% dividend yield. It's the second highest dividend yielding stock in the Dow. It's a dog of the Dow. It's been around forever. The stock is IBM. And you're saying, why is this guy, Mr. Growth, talking about IBM? Well, it's about balance, but hear me out. First of all, it pays an awesome yield. It's going to pay almost a 5% dividend yield. It's crazy cheap, trading between 10 and 12 PE ratio. So I categorize it as a value stock. It has cash flow. The balance sheet's good. The management is not good. But the Red Hat acquisition is what's going to propel this company into the next stage. If you look at companies like Microsoft sat and did nothing for 10 years, and all of a sudden it shot up 400%. You look at Cisco, it did the same thing, and it's kind of going through a little phase now. And I think it's one of those stocks that's going to make a nice run over the next 5 to 10 years. Is it going to perform like a growth stock necessarily and outperform the S&P 500? Probably not, but it pays a 5% yield. It's what I call a pretty safe stock if the economy does fluctuate, and it's going to help my overall yield in my portfolio. Now, a couple of things about IBM. So a couple years back, Warren Buffett sold all his shares. Well, when that happens, nobody wants to touch the stock. Well, then they turn around and they buy Red Hat for $30+ billion when IBM's market cap was only around $100 billion. And everybody said, you're absolutely insane. You're crazy. Now even the value investors or the income investors don't like it because of the ridiculous amount of money that was paid for the acquisition. So why do I like the stock? Well, okay, let's make a comparison. And I don't want you to think that I'm comparing these two companies that they're the same. They're not. I'm making a simple comparison, just a visualization. Look at Star Wars, LucasArts. Disney bought Star Wars, LucasArts not that long ago, just back in October of 2012. They paid just over $4 billion for the Star Wars franchise. Today, it's worth over $30 billion, the franchise. And that's just in a 7-year run. They made a $26 billion return on investment. And Star Wars is propelling Disney and their growth into the next level with Disney Plus. The Mandalorian is the entire machine that's helping drive that growth and subscriber base for Disney. They did the same thing with Marvel Comics back in 2009. Disney paid about $4.3 billion for that, and that's a $20 billion franchise. So is it the same? Is Red Hat the same? No. But what I'm saying is when you look back, Marvel and Star Wars, everybody thought Disney were out of their minds paying $4 billion for each of those acquisitions. And you look back at it now, 10 years or less later, and you think, wow, that was a really good buy. That was a great return on investment. That was a smart move. Well, Red Hat is going to be the same, in my opinion. If you look back in 10 years, you're going to say, wow, that was a really good move. Even though they paid $30 billion for it, it helped IBM get to the next level, sustain some existence, and continue to generate cash flow and actually accelerate their growth. Are they going to be a growth company and outperform the S&P 500 again? Probably not, but it's a 5% dividend yielding stock. It's going to be something safe that you can keep in your portfolio through ups and downs. And it's, like I said, it's cheap, between 10 and 12 on the PE ratio. So what I want to do today is I want to actually show you, I want to explain what Red Hat is. A lot of people don't understand what Red Hat is. There are some opportunities with Red Hat, a hybrid cloud, and some partnerships with Amazon and Azure and things like that, that's going to allow IBM to continue to generate cash, to grow, and also cross-sell their existing products and services. So Let's dig into that. Let's dig into some numbers as well and show you some actual numbers that they're targeting for projected growth, sales, and revenue for Red Hat. And let's just see if this acquisition makes sense. I think IBM is a buy in the $130 price range, and I think if you get in now, you're going to thank me in a couple years. Could I be wrong? Yeah, I could be wrong, but this is one that I really like, and I'm going to show you some analysis, so please stay tuned and check it out. Okay, guys, let's dig into Red Hat, but first, it's important for you to understand what open source is. Now, if you're not in the software industry, you might not know what open source is. So let's just read this real quick. This is right from Red Hat's website. Open source is a term that originally referred to open source software, OSS, and it's a code that is designed to be publicly accessible. Anyone can see it, modify it, and distribute it, and the code basically the way they see fit. Open source software is developed in a decentralized and collaborative way, relying on peer review and community production. Open source software is often cheaper, more flexible, and has more longevity than its proprietary peers because it's developed by communities rather than a single author or company. And obviously you can go into it more, but that's really where Red Hat cut its teeth. And a lot of people might not know what Red Hat is or what they're about. They've actually been around a long time, and this is also from Red Hat's website. This is from their blog. It is a little bit older. It's from March 28th of 2018, but I thought this was really good information, and most of the stats are still true today. So I'll cover some of the highlights here to give you a little bit of background about Red Hat, because, of course, Red Hat was acquired by IBM, and this is really what I think is going to be the most important driver for IBM's future. So 25 years ago, the world looked very different. A gallon of gas averaged $1.16 in the United States. The Beanie Babies were introduced. Jurassic Park was the top grossing movie. Nelson Mandela was awarded the Nobel Peace Prize. Buckingham Palace opened its doors to the public for the first time. And CERN released the source code for the World Wide Web. And a small businessman met a geek at a tech conference, and Red Hat was born. So you think 25 years ago, so I'm kind of at that age where I'm kind of older, so I know some of my followers are younger, and that's awesome. But, I have this conversation with my niece over the weekend for Thanksgiving, and we didn't have cell phones when I was in college, guys. I had, Yahoo email, but going back to, say, my sophomore year of high school, the internet definitely didn't exist in the capacity it does today. So, you're talking about 25 years ago, it's actually 26 years now, because this was written in 2018. Red Hat was actually founded in 1993, March 26. So I would have been a sophomore in high school, probably got my first email account. I don't think our high school even had computers until maybe my junior or senior year. So going to college was interesting because cell phones weren't really mainstream yet. The internet was just catching steam. I wish I could go back in time because I'd be very, very wealthy. If anybody knew that the internet would grow the way it has, and it's really still accelerating when you think of the growth for applications and technology, et cetera. Red Hat got its name from founder Mark Ewing, who wore a red Cornell University lacrosse hat given to him by his grandfather while attending Carnegie Mellon University. It's pretty cool, useless information for your next cocktail party. So this is going to be old, 450 open source project. It's way more than that. But Red Hat Linux first appeared in 1994 with an October release called Halloween. And its the IPO actually happened on August 11, 1999. This is one of the tech bubble stocks that actually survived. They made more than 25 acquisitions since becoming public. That was back in 2018. Our first acquisition took place in 1999. Atomic Vision, a San Francisco design studio. Awesome. To make improvements to the Red Hat website. The logo was developed in 2000 and features the Shadow Man icon, which we believe became a beacon for open source software movement In 2018, we began an open initiative to update and simplify our corporate logo and brand system. I won't read all these guys, but it's pretty cool stuff. I mean, these guys, the point of this is they've been around a long time. They've been around, and as of 2018, they had 2,000 patents, 99% of free open source software. So they've been around a long time. They've been around for 25 years, and now they're they're pushing more towards the cloud and other things. Let's look at some of their solutions. So their products and solutions. So the hybrid cloud solution is really their hot button right now. So, why hybrid cloud? Modern IT is hybrid IT. Your enterprise has infrastructures, platforms, apps, and tools from different vendors. Proprietary tools don't talk to each other, and apps cross cloud slowly, weighed down by data. You need advancements in infrastructure management and development that bring your clouds together. So these guys help do exactly that. And what I think is really important is that they partner with all these exciting companies that everybody wants to own. Alibaba, Amazon for Amazon Web Services, Microsoft Azure, and the Google Cloud Platform. Obviously IBM, because IBM owns it now. So when you think of cloud, Red Hat partners with all of the big boys, and it actually allows IBM to work with these big guys as partners in different capacities to sell their bolt-on applications and software, their services, their consulting, etc. So this Red Hat acquisition allows IBM to sell stuff they already own and cross-sell and partner with all these guys that, they've partnered with them in the past, but this opens the door in a tremendous way because Red Hat has a lot of respect in the industry, in the cloud world. So just really quick though, here's some all their products. They've got the Enterprise Linux, they've got the JBoss Enterprise, the OpenStack, the virtualization. They have all the middleware, all the cloud computing stuff here, the app development, the storage, automation, and management. These guys are all things cloud and Internet of Things. They're not going anywhere. They're good at what they do. They're well respected. When most people think of Red Hat, they think of a young, exciting company. They've been around for a long time, but most people would not. If you ask somebody, when was Red Hat founded? I doubt they're going to tell you 1999. They're going to think it's one of the newer, the newer kind of tech, like a Splunk or, one of those type of companies. So this is the last thing I want to cover, and this is really, I think, what's important. It kind of ties everything together, what I'm talking about. But on August 2nd of this year, IBM held an investor briefing, and the briefing demonstrates how IBM and Red Hat are better together, ideally positioned to capture the hybrid cloud opportunity. So this is what they're pushing. This is what Red Hat is good at. And here, I want to jump right to the financial benefits. The addition of Red Hat will accelerate IBM's growth profile, expecting to add 200 plus basis points of revenue growth over the next 5 years through a combination of Red Hat and IBM incremental revenue. The transaction is expected to be for both the operating gross profit margin and free cash flow in the first year, and the IBM operating earnings per share by the end of the second year, with near-term operating EPS dilution driven primarily by non-cash purchase accounting adjustment. What does that mean? Basically, well, it means that this year. So they're getting 2 points of growth this year in 2019, but we're going to get 4 to 5 points in 2020 and 2 to 3 in 2021. That's good stuff. So Red Hat is generating over $1 billion of free cash flow annually, combined with the additional IBM software and service profits. Red Hat net of incremental interest to finance their transition over and other acquisition-related charges is expected to add to IBM's free cash flow by 0.5, so $500 million in 2020 and $1 billion in 2021. And they see this continuing to grow and perhaps even accelerating. So this is really just a short to midterm, kind of snapshot or view into what they expect. But, this is really good stuff. I mean, if you look at the IBM and Red Hat free cash flow, this is really, really good stuff. The standalone business adds to solid IBM-based performance, reduction driven by temporary cash items, immediately accretive margin. The bottom line is it's going to impact the bottom line for IBM, guys. And the fact that they actually break this down and show you, how much revenue and points you're going to get off this acquisition. I like the transparency. I've said this before, but the current CEO, I'm not a huge fan of IBM. The former Red Hat CEO is still running Red Hat, and Red Hat's being run, even though they were acquired. And, obviously if you ask somebody at Red Hat, they don't like the fact that they're part of IBM, but they're trying to run Red Hat the best they can as kind of its own business within a business. So the senior leadership, the CEO is still running. He's at the helm of Red Hat. Obviously some of the middle management they got rid of, but they're trying to keep Red Hat as Red Hat. They're selling Red Hat as Red Hat. They're not going in and replacing the name as IBM. Red Hat has tremendous brand and loyalty, and they're going to continue to leverage that brand to get them to the next level and cross-sell their solutions. So I encourage you to take a look at this. If you Google IBM 2019 investor briefing, and you can actually click on this link. This will take you to the presentation if you want to look at it. I encourage you to watch that because there's a lot of information on there that I thought was beneficial. The bottom line here is I think that Red Hat is going to help IBM, continue to generate profits, to be relevant, because let's be honest, without this acquisition, there's a good chance IBM is less and less relevant, maybe extinct. But I feel that this move, even though it was expensive, was needed for IBM to continue to have relevance and to continue to grow and to generate cash. I do not see any issues whatsoever, with that 5% dividend yield. I believe that's very safe. Their balance sheet is still pretty strong. Obviously, there's some short-term debt impact with this acquisition, but they will take that care of. In fact, as soon as next year, they might have that all paid back down, and now they're back to being a cash-generating machine. So when you think of dividend growth investing, this stock is going to continue to not only pay its dividend, but increase its dividend. I also think it has upside, of course, with the growth and expansion within the cloud. So hope you liked this video. If you did, please subscribe. The bottom right, click subscribe, click the little bell to make sure you get notifications. I try to do a video every week, and if you have any comments, please do drop me a comment below. If you haven't checked out our group on Facebook, please do. It's Fired Up Wealth. I encourage you to join that. If you have any ideas for videos, anything you want to talk about, you can let me know in the comments below here on YouTube, or you can visit our Facebook group and continue the discussion there. Thanks for watching. Have a great rest of your day. Take care.